All right, let's get more on Dubai's debt crisis and the ripple effects. And for that, we are joined once again by Marcus Mabry, international business editor of the New York Times. Happy Thanksgiving, by the way.
Happy Thanksgiving.
So, I think a lot of people have been shocked by this story because we always think of Dubai as being an extremely wealthy nation. How did this debt get amassed?
Dubai is an extremely rich nation. It's also an extremely over-leveraged nation. You know, Iceland went through a default earlier this year. What happens is that there are some countries that, like some, say, American homeowners, actually overextended themselves. They actually owe too much. They owe more than they can afford. Dubai, which is one of the Arab Emirates that is not actually rich in oil, actually overdeveloped. We've seen the massive real estate, extraordinary real estate developments there.
So they were affected just like everyone else when real estate prices collapsed.
Absolutely. So, and now there's a credit crunch that's actually come now to Dubai. What we're seeing now, the markets are so nervous about, is the possibility of a contagion. This may make other countries other emerging markets and other Emirates look like they're not a safe bet. That's the fear. Before Dubai actually asked the creditors of Dubai World, their leading investment vehicle, which actually has some $59 billion in debt, before it actually asked the creditors of Dubai World actually to reschedule the debt payments, there was an implicit assumption that the other Emirates that are rich in oil, especially Abu Dhabi, would stand behind Dubai so that this debt would never go bad. It was when they asked to reschedule those payments that the markets thought, oh my God, there's something deeper that's wrong here.
And we've seen the financial markets around the world react with a great deal of shock. And I'm wondering, what are the problems for Europe and especially what could be the problems in this country as a result?
Well, the biggest question is what's the exposure of, say, European banks, in particular banks in the UK, Royal Bank of Scotland, HSBC. These are banks that have some, $2-3 billion at least. They actually are owed by Dubai World.
And banks that had their own problems.
Absolutely. And then, so we don't think there will nearly be as much of an issue with U.S. banks, although you know what, we really don't know. And markets hate uncertainty. And it's that they don't know that actually is roiling the markets now.
And how much of an impact did the fact that American markets were closed yesterday for the Thanksgiving holiday, how much could that have fed into this fear?
It may have fed into it a lot because, we had very thin trading yesterday. In the U.S., we were closed. The Muslim countries were closed for the Eid holiday. So it was really only Europe, to some extent Asia, which, reacted much less yesterday, reacted more today. Wall Street, we saw, was down today, again, and then recovered a little bit. But the fact is still, today, the day after Thanksgiving, you have very thin trading on Wall Street. So we won't really get a sense of what the markets feel about this until Monday when they reopen.
What's the long-term prognosis? I mean, how does Dubai continue to pay its debt then?
In the end, Martin, it's really hard to imagine that Abu Dhabi or another emirate will not in the end have to come up, pony up and bail out if necessary, rescue if necessary, Dubai World and Dubai. Because there's really, it's not good for anyone, any emerging market or any emirate or any sovereign debt of anyone, say highly leveraged countries like the UK, if this war to go south. So I don't think there's actually in the end any doubt that in the end Abu Dhabi and the other Emirates are going to have to stand behind this debt.
Too big to fail.
Yeah, too big to fail. Dubai is too big to fail.
All right, Marcus Mabry, as always, we appreciate the insight. Thanks.
Thank you.